Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, June 4th, 2024. Let's take a look at the charts. I like to start with the big picture always. It is sort of obviously the trend is your friend, and the trend really begins with the longer term outlook, the undercurrent, if you will, of the river, so to speak, as an analogy. So the 1 year trend remains bearish below 218.13. Rallies up to 218.13 can be sold as we move through the third quarter. And even into later year, we can fall away from here to channel support over the following, as we have several times, 2 to 3, 3 to 5 months of testing it. And over that time frame, it actually will converge with the 101.81 January low of last year. If we can close above 218.13 in the coming weeks, just the opposite. That is a meaningful buy signal into later year. I would expect the 320s within probably 3 to 5 months, but we're not there. And in fact, the recommendation is to sell signals more aggressively than to buy signals, if you will. Or in other words, let me frame it this way. Here's a case in point. We've got a 156.92, a 4-week channel bottom. We're not going to see that today, of course, but as we approach it, assuming we do in the coming 2 or 3 weeks, and I'll give you that signal here in just a moment, you can certainly buy it, but you're not buying it. I'm sorry. Yes, you can certainly buy it, but you're certainly selling it more aggressively following a settlement below 156.92, if that makes sense. So because of the longer term heavy dynamic, the possibility of closing below 156.92 is more real, is more likely than closing above some other meaningful price resistance area that we find, for instance, at 191.34. And so 191.34 is an area that can be sold as we move through June, and we can fall away from 191.34 down to some variation of 156.92. You see them both on this chart. And so let's take a look at the day itself. I hope I made that all clear. I probably didn't do a very good job of it, but I'm going to leave it alone anyway. The trend line that we find today at 180.46 can contain daily buying pressure. So this is solid day trade resistance for day traders, and even 2 to 3 day swing trade, if you will. Those who can hold positions overnight, as I've been saying, holding below 180.46 will keep 169.55 in reach over the next day, 2 or 3. This may well be tested today. 169.55 can contain session weakness. This is a solid area that if you sold the market yesterday at 180.46, you can take profits at 169.55. We could bottom out at 169.55 today and rally over the next day or 2, 3 at the most, back to 180.46. That is kind of our 2 to 3 day swing trade dynamic. If we close today below 169.55, the 2 to 3 day swing trade continues south. So if you've done nothing, you can go short with a settlement below 169.55. If you buy 169.55, I would highly recommend that you have a pretty conservative stop loss, even a reversal stop. In other words, selling twice the amount, if you will, that you bought, so that you are now short the same amount down to 156.92 over the following 2 to 3 days. 156.92 is meaningful channel support, may well contain weekly selling pressures, and from here we could possibly round back up into later June. But it would be a settlement below 156.92 given the longer term bearish dynamic that exists by several measures, most notably, as I mentioned, below 218.13. It would be a settlement below the 156.92 formation that would set up, I think, a 1 to 2 month target into the low 100 area. You can see this trend line alone is probably around 110 and dropping. And there is a channel bottom coming down. In other words, closing below 156.92, and it's not going to happen today, but if so, I would expect the 101.81 January 23 low within a couple of months of closing below 156.92. Let's talk upside today, that if we do happen to close above 180.46, this 191.34 channel top is likely within a day or two, where we could top out not only for the week, but possibly into later June and fall away from here. Once again, this is a meaningful channel resistance that exists inside this longer term channel at 218.12. In other words, it is part of the bear trend. And if you're interested in playing the short side of Tesla, or let's say that you're long Tesla and you're kind of itching to get out of some of them anyway at a decent price or more decent price than where we find ourselves presently, 191.34 is such a price point, because from here we can fall off through June and away. And once again, if we close above 191.34, we have a 2 to 3 week buy signal to 218.12 on the daily chart. On the weekly chart, 218.13, able to contain buying through the third quarter, and we can fall away again from there. And once again, if we close above 218.13, the bear market, at least over the last year, has been neutralized, and we should see then meaningful gains over the following 3 to 5 months into the 320s. Have I said everything there is to say? A day trader selling 180.46, day traders buying 169.55. 2 to 3 day swing traders can do the same. 2 to 3 day swing traders go long with a settlement today above 180.46, expecting the more meaningful 191.34 within 2 to 3 days, where profits can be taken and setting a short can be made at 191.34 as we move through June activity. Downside, 2 to 3 day swing traders go short with a settlement below 169.55, expecting 156.92 over that time frame. Where not all time frames. Let me back up a bit. 3 to 5 day swing traders and 2 to 3 week swing traders may have a go at going long at 156.92. It is a channel bottom, after all, classic one. You can't ignore its potential to contain weekly, possibly monthly selling pressures. But let me finish with this. That given the longer term bearish dynamic, given the bear trend that exists below 218 and change, you may just await a settlement below 156.92 to clarify longer term bearish continuation as we move into July, August activity. Because as I say, it would be a settlement below 156.92 that would set up a 1 to 2 month target at 101.81. So whether you buy 156.92 or not has everything to do with your trading style, of course, and your time horizon. But there's nothing wrong with waiting that one out. I'm talking really here to 3 to 5 week out to 1 to 2 month swing traders, that if we close below 156.92, that is your signal to sort of pounce on a short position. It could mean just reaching for 100 strike out of the money puts that don't expire for at least 3 or 4 months. But until then, your next short sale in terms of the 3 to 5 week out to 1 to 2 month time frame is just merely testing 191.34. So 3 to 5 weeks out to 1 to 2 months, you're either selling 131.34, 191.34, or you're selling a settlement below 156.92 if you're interested in playing the trend itself. I think that I pretty much said it all. So please click like, share, subscribe, check out wickedstocks.com. Take advantage of our 5-day free trial. I'll be back tomorrow with Wednesday's Tesla report, and you have a great day.